Hello, everybody. Welcome to the Silver Log. It is the 15th of April, 2011. Hope everyone's doing magnificent as we move into the weekend. Currently, silver trading at $42.61. It is 10:22 a.m. Eastern Time as of the recording of this video. And the first chart I put on the blog on Thursday, which I have noticed Friday's been having some major updates. The chart on the right hand side is the silver chart going back to the breakout in August and only counts days on Friday. So all of these gap moments that you see, they're really Monday to Thursday trades, but only the Friday ones are shown. And on the right left hand side, you can see it a little more clearly how the movements would be if we only counted Fridays. But I think what's really very noticeable is there's been a lot of big days. Overall, 8 straight up days in a row. 10 out of the last 11 Fridays have been up days, and a pretty decent amount of them have had pretty good gains for that matter. So Friday has been a very bullish day. So far, it is up for the day. We'll most likely make it 9 straight Fridays with an up day. As far as this hourly chart is concerned, I first want to focus on the orange line, which is the 5-day moving average. A lot of people like to use this. It seems to be very common amongst many people looking at the charts. And when we had this rising 5-day moving average, it wasn't able to find support in here, which is very normal. It comes back lower and establishes or even tests some previous support. And then it comes up to this 5. So now we're at a point where, do we want to, is this going to be a bear trap? We're going to go higher, or is it going to be resistance? Well, the answer was this was resistance. And what happened was it didn't make a higher or lower low. At least pretty much it didn't make it. Yes, it technically did. But when it came back up to this 5-day moving average, it was no longer resistance, which pretty much shows that this was a failed move, which created a fast move towards the upside. But not only was it a failed move, but it shows that the sellers really are having a hard time taking any control whatsoever within this market. When it then came back down to the 5-day moving average, test 1 was at the end of March, start of April, and it was a successful test. Test 2 was earlier this week. Once again, it was a successful test. Therefore, because we've just broken above this level, we're still barely above the previous highs. I think that there should be room for some more upside as it attempts to get towards that 43.40 level that I was talking about earlier, even last Friday, but even closer to 44. It's tough to state, but the reason why I state that is the Fibonacci levels. These purple lines go up and down as they make new highs. It calculates this low in here, and whatever the high happens to be. So go from this high, then we made new highs again, and that's why the Fibonacci levels go higher. They always seem to match up pretty well with previous resistance and support. And the big level that I'm looking at right now is roughly here at 39.80, 39.75 area. And if that would be the key level, that means this would have to go up a little bit, which would work out very well because that would be the area of previous support resistance here. We're already at that level anyway because it's between 36.50 and 38 for this general area in here as a potential area for resistance. If, of course, it continues to go higher, then I would expect this line to probably move up towards this in here. But for now, we'll just stay away from that. I do expect there's a good chance that the market's going to continue its gains probably today and into the Sunday night session. What I like about the short term is this pullback earlier today that came right back down to the 1-day moving average and this previous resistance area. Moving now on to the daily chart, very much still in this trend, the upward trend, and the as I was saying, there was a lot of room to go either to the up or the downside. When we look at it in this form here, we're in the middle part of this trend, lots of upside room. If you figure we were in a time correction in here, we've had only the one breakout candle. Usually when that's the case, there's more gains on top of that. That doesn't mean there will be, but it just means that it's favored to be so. As far as the weekly time frame is concerned, we're on a roll. If you This would be the fourth straight week that will be on the upside, and the 11th out of the last 12 weeks will now be up. Therefore, it's like an 11-1 record. Would you ever bet against a team that is 11-1? For the most part, the answer to that would be no, you would not. However, as far as trend lines are concerned, we got the similar sort of pattern that we have on the daily chart. And that is we're right in the middle of this upward range, giving us reason for both up and downside room. If anything, you might state we're pretty much in the middle of this range. But basically, a lot of upside potential is still available until there's anything at all that can tell me, yep, it looks like the market's going to be rolling over. I'm still going to be giving a lot of bias towards upside potential. Thank you for watching, and have yourself a great day. Bye-bye.